Alexia Howard Beyond Meat stock analyst upgraded the stock, predicting it would do well coming out of the pandemic. Cramer of Mad Money believes Beyond Meat has the potential to go to the moon. I have a son that loves the product and the stock. But is it really ready for prime time for my portfolio? Well, let's find out. Welcome to MGA Investing. My name is D, and in this Beyond Meat stock analysis video, I will take a look at whether or not Beyond Meat is ready for prime time within my stock portfolio using a four-part stock analysis method called the D.U.M.M method. Now, if you've watched some of my other comprehensive stock analysis, you would know the D.U.M.M method is a simple, repeatable, replicatable, non-technical stock analysis method that does not require advanced math skills or technical chart reading skills to use. What is the D.U.M.M method? D.U.M.M is an acronym. D stands for Durable Competitive Advantage. U stands for Understand. That is, do you understand how the company makes money? If you don't understand how the company actually makes money, how do you make sense of the long-term revenue prospects of the company? M, the first M, M1, stands for management. This is about measuring the effectiveness of management and running the business. I use a 5-point metric to determine the management score. Now, the second M stands for margin of safety. That is finding the right time to buy the stock at a discount. I use a rating scale of 1 to 10 for each of the four components that make up the D.U.M.M method. 1 being the lowest score and 10 being the highest score. The scale helps me measure the relative strength of each component. The highest score possible is 40. The middle score is 20. And that's my cut score, meaning anything that falls here or below that's not currently selling far below a reasonable margin of safety, I immediately pass on. I generally look for well-run companies as defined by the D.U.M.M method. That's companies that have the potential to deliver 15 to 20% return within a 3 to 5 year period. Here's what my decision chart looks like. This is a decision chart from a recent stock analysis I did on Teladoc. As you can see here, I give it a score of 6 on a durable competitive advantage, 10 for understand, 6.5 for management, and 5 for margin of safety, and a combined power score of 27.5, and also a caution symbol. This simply means that if I decide to buy this stock, I need to proceed with caution. And if so, I must consider averaging down into the stock with a relatively small position, anywhere between 175 to 140 or less. By the way, if you'd like to understand the research I use to support each of the scores, I encourage you to go back and take a look at some of our previous videos, that whole entire video series on Teladoc. That can be found on MGA Investing on our YouTube channel. And there you can get more detail supporting each score that I give using this particular decision chart. Now, to make it easier to find the videos, I listed them below in the description which video deals with which component of the D.U.M.M method, because the title of each video is written to allow for easier search on YouTube, not necessarily by its description using the D.U.M.M method. Let's take a look at how Beyond Meat measures up. Now, I'm going to skip my analysis of Beyond Meat's durable competitive advantage analysis and tell you I actually gave it a 6 because I just completed that video and published it just a week ago. So if you'd like the detail behind why I only gave it a 6, be sure to go back and watch the video Beyond Meat Competitive Advantage, Hope or Hype. For you in the D.U.M.M method, which is understand how Beyond Meat makes money, I gave it a 10. It was easy to understand how Beyond Meat made money selling its products through principally 8 SKUs and 2 distribution channels, retail and food service. Now, food service also includes QSRs, quick service restaurants, which we also call fast food restaurants. As with many businesses, the pandemic had a significant negative impact on Beyond Meat's ability to operate during this time. Now, just prior to the pandemic, it had achieved a major milestone in that they had nearly achieved a 50-50 balance of distribution of retail and food service channels. But by the early part of the pandemic, that tailwind had quickly turned into a headwind as the business balance shifted to 90-10 ratio retail to food services. As many universities and other large food service companies were operating at, well, about a third of capacity or not at all due to the restrictions imposed during the shutdown. But despite this setback, amazingly, Beyond Meat managed to finish year over year with a 37% increase in revenues. Now, Beyond Meat ended 2020 with roughly 19% market share, impressively owning the spots for the top selling SKUs in all plant-based meat and for the top 5 SKUs and plant-based meat overall. Their main SKUs today are the Beyond Meat Burger, which accounted for 58% of Beyond Meat's revenue in 2020. and 64% of that revenue in 2019 and 70% of the company's revenue in 2018. They also have Beyond Meat beef, Beyond Meat sausage, Beyond Meat breakfast sausage, which represented approximately 7.7% of the increase in U.S. retail sales for Beyond Meat in the second quarter of 2020. Beyond Meat meatballs, Beyond Meat crumbles, Beyond Meat pork, which is currently being sold in China, Beyond Meat chicken, which should come available sometime this summer, and was first released back in August of 2019 during the chicken sandwich wars. And it was released in Atlanta, Georgia back in August of 2019, and it sold out in less than 5 hours. Let's take a brief look at revenue growth. I'm using the 2020 annual report because it gives me a broader view of how revenue is trending. I want to know if the business revenue and expenses are trending in the right direction. What I'm looking at right now is the Beyond Meat annual report, and the purpose of this is just to very briefly show you just a couple of things as it relates to revenue and revenue growth. Now, you can see from 2016, revenue continues to go up every year. Now, you got to remember, that's despite the pandemic. And especially when you consider the shift in the balance of business from what I told you earlier, 50-50, right? So it was 50% retail, 50% food service in terms of its distribution. It has now moved to a 90-10 ratio. That's 90% retail, 10% food services over that pandemic period. So, but despite that, if we take from 2018 to 2020, you have a compounded average growth rate of 115% just in that period. I like that trend. Food services revenues were $106.2 million in 2020 versus $153.1 million in 2019, a 30.6% decrease in revenue, but we understand the cause and the shift in the balance because of the pandemic. Food services revenues in 2020 did get offset by the increase in retail channel net revenues, which was a result of more at-home consumption. Beyond Meat's products were available in approximately 42,000 food service outlets in the U.S. and over 18,000 outlets internationally. Retail channel net revenues in 2020 were $300.6 million versus $144.8 million in 2019. Net revenues grew in 2020 by $155.8 million or 107.6% compared to 2019 over the same period. Other than the three T's, taste, texture, and trust, a deciding factor of building sales momentum will be product distribution, meaning getting the Beyond Meat product in the hands and on the table of more consumers globally through retail outlets within the U.S. and internationally. As of December 31st, 2020, that included 28,000 retail outlets in the U.S. and over 34,000 outlets internationally and growing. So a pretty straightforward presentation of how Beyond Meat makes money. And on the D.U.M.M decision chart, well, I gave Beyond Burger a 10 in this category. There are two things worth considering from understanding this portion of the D.U.M.M stock analysis of Beyond Meat. One is that you see the relationship between distribution outlets and product introductions. As Beyond Meat increases their distribution outlets, retail food services, and strategic partnerships in the coming years, it becomes increasingly easier to bring more consumers in touch with their product for the first time. As customers become more familiar, well, trust increases, and as trust increases, so does loyalty, and it's much easier to get consumer adoption of newer versions in terms of taste and texture profile. And the adoption rate of newer product introductions like plant-based chicken and pork items, as was demonstrated by the launch of Beyond Meat breakfast sausage in 2020 that accounted for 7.7% of its revenue in 2020. The ability for Beyond Meat to have a wider and more diverse distribution network positions Beyond Meat for exponential sales and revenue growth in a $1.4 trillion industry. In some ways, it reminds me of Apple's distribution system that was eventually built around the iPhone and now Apple's ecosystem. Think about it. The iPhone became the distribution point for Apple Music, AirPods, Apple Watch, touch computing, iMessage, FaceTime, podcasts, photos, camera, and a host of other products enjoyed by millions today. The very moment Apple drops a new product or product feature for that matter or service, it is immediately a multi-billion-dollar business or it helps to secure a customer loyalty in an existing multi-million-dollar business. I suspect if Beyond Meat can continue to work to make their own products obsolete, they could become the food tech giant in our future. Thanks for watching. If you found value in this video, well, of course, smash that like button and make sure to subscribe so you can catch the next video in this series where I discuss in the next video the M in the D.U.M.M method, and that's management. And here you'll learn the 5 metrics I use to measure Beyond Meat's management effectiveness. See you in the next video.